Hello, everyone. We have Joe Whitesel here from Northwest Commercial Lending. He is here today to tell us what is going on the commercial lending side with everything that's going on with coronavirus and the economy. Joe, how you doing today?
Hey, I'm doing great. I'm out of the house for a
Nice.
brief moment and don't have a 4.5-year-old and 7.5-year-old screaming in my ear. So,
Awesome.
but playing a lot of catch up, and every single day we're learning something new about what's going on in this crazy environment. And
Yeah.
one thing I do want to let everyone know is banks are lending. Commercial lenders are lending on loans. As we've all talked in the past, and a lot of your students that I've talked to that understand the commercial mortgage business is so different than residential lending. Every bank is different. We do have our Fannie Mae and Freddie Mac. Fannie Mae just recently came back out, and they're doing small balance 1 million and up, and their large balance. There are a little couple stipulations. They're asking for reserve escrow accounts and for the first 6 months, which isn't too bad, but they are going up to the 80%. So we do have Fannie agency loans back. A lot of our community banks, big banks, they're still lending, but a lot of them have put floor rates on and to kind of slow the volume down. And the reason why I'm talking about slowing the volume down is a lot of people are going in and getting support, and a lot of these banks don't have the capability to help out all their current clients or customers. And so while they're working on helping people with deferments or figuring out if they need help, it slowed the intake of new business in. And
Mhm.
so what a lot of lenders have done is they're not lending, but they've moved interest rates up just to slow the intake of volume in. We're starting to see a lot of lenders loosen up a little bit, kind of like I mentioned with Fannie Mae. But majority of our credit unions, community banks, they're still lending, and rates are still in the high threes, low fours. But of course, every bank is looking at these properties with a magnifying glass, making sure that rent rolls are, we have occupancy, people are paying rent. We are hearing from a lot of my apartment owners that they are receiving rent checks, and
Mhm.
so that's very encouraging. And I've also encouraged a lot of people to look at, if you own an apartment right now, start looking at the Section 8 in affordable housing and see if your property can get qualified for affordable housing. Because as an apartment owner, if you know that the government's going to cover 75-80% of that rent, then I mean you're in a pretty good situation.
How are
But
appraisals
overall,
looking?
we feel
Sorry, I was just saying,
that's a
how
good
are
question,
appraisals looking?
Kenji. Okay, yeah, no problem. Appraisal status, it's kind of, it's a touchy one because a lot of the tenants won't let an appraiser into the property. But appraisers are going out there, and a lot of the lenders are saying, hey, vacant units, you need to see the vacant units no matter what. Regular appraisal, taking pictures, and they're asking to take a picture of out on the front door or that.
But what about the values of those appraisals? How are they coming?
Yeah, we feel right now the values of the appraisals are holding up. On apartments, it's truly based off of vacancy and the net operating income that's being produced. And so we haven't seen a huge dip because vacancies are still at the all-time high. And I honestly don't see vacancy going anywhere in our market because people need a roof over their head. I think with there's so many more options for affordable housing and Section 8 and all those options, and so I feel vacancies. I don't. I feel vacancies will stay pretty high. And now it's a matter of, okay, let's make sure these people are still paying their rents, or once we get back into the job, the country opening up, and people starting to work again, hopefully we're going to just continue to keep going.
Yeah. You said that you think vacancies will stay low. Is that what you meant?
Yeah, I feel vacancies from everything that we've been hearing from our underwriters and appraisers that are going out. There's some reports that are starting to be sent out by a lot of these agencies that they feel vacancies will stay low, because in crisis like this, people need roofs over their heads, um, and again, there's so many more advantages out there for the average renter apartment rather than a renter in a single family. Single family is up to the person that owns the property if you're going to help the renter out. Well, when you own an apartment, there's a lot, like we talked about the Section 8 and affordable housing. There's many options out there for the renter,
Yeah.
to help these.
In your sense is that interest rates, it sounds like they're low now. What do you think will happen with interest rates over the next, 6 months to a year?
I feel the interest rates are going to stay low. I think there's too much moving in our industry. There's too many properties. I think this, in some ways, has might have kind of provoked the older generation, the mom and pops that have been holding on to their retirement properties for the last, 15 years. They maybe owe zero on it, and now they're might be scared because this epidemic that happened. Like, all right, I might lose my retirement. So we're starting to hear from a lot of brokers that, hey, get ready, third, fourth quarter, and first quarter of 2021. This apartment market's going to really start picking up. There's going to be more, properties on the market. And so I've been doing these commercial loans. I started Northwest Commercial Lending in 2011. I've been, honestly, since 2012, when the rates really dropped down from 6% into the fives. I've been telling everyone rates aren't going up because our economy can't sustain, this. And I just think there's more meat left on the bone for the buyers, because a lot of these banks have been eating fat and haven't trimmed their margins down. And now you see the treasuries at an all-time low, but the banks are still keeping their spreads and their margins up. And so as we get out of this epidemic, I think those margins will start coming down. And I think we're going to be in the threes again.
Great.
Great.
Okay. Well,
And
thank you so much, Joe, for the update. It's really great, and we'd love to have you again. Because this is a rapidly evolving market. It seems like every day there's something new. So really appreciate your time.
every day's a new day, and it's you learn one loan product, and then that loan product changes in the next 48 hours. And yet sometimes you have to call the borrower back and say, unfortunately, that deal that I just sold you isn't there, but
Mm.
we're going to find you another one. That's our
Yeah.
job. So,
Yeah,
Yep.
for sure. Okay. Well, great. Thank you again so much.
well, we appreciate it, and talk to you guys soon.
Okay. Bye bye.